Gracias, gracias. Oh! All right. Hey, everyone. So, just a quick show of hands. How many of you use DeFi? Crypto? Any crypto exchange accounts? How many started in crypto in 2010? 11, 12, 13, 14, 1, 15, 16, a few, 17, all right, 18, 19, 20, 21, 22. All right, I think 20, the group of 20 is the max. All right, so I'm the founder and CEO of Kresko. So what we are doing is we want to enable access to wealth in places where there is no access. So we want to help people with financial tools. So we will start with enabling people to be able to buy stocks from anywhere in the world, and we will create synthetic stocks. What that means is that if you want to buy, I don't know, $10 worth of Tesla stock and the price of Tesla is 1,000, you can buy a fractional stock for like zero point 0.01 stock for $10 or zero point 0.01, sorry. So we do that by creating what is called as like derivatives. So that is our startup. So we want to make it like really, really easy. Right now, there are projects that allow you to do it, but it's really hard. And we want to be mobile first. So we want to be able for anybody to just use a mobile phone and be able to buy synthetic stocks or even synthetics like crypto as well, gold, and other like exotic things. Maybe, you know, even if we want to, we may do like, hey, do you want to like trade the price, like the floor price of an NFT? We may do it if people are interested. I don't know. How many would be interested here if you want to like just trade, okay, like there's Bored Apes Yacht Club, but you want to trade the floor price of it. And how many would be interested in that? All right, a few people. All right, cool. That is something we can do. Anything that has a price, we can trade that. So it doesn't matter what it is, right? It could be what is the temperature today, or like anything that has some kind of like price feed, we can do that. So just a quick introduction about myself. I'm Deepak. I'm the CEO of this company, and also I have been in crypto batch of 2013. I've been since then investing, angel investing, doing like some degen stuff. And now we call ourselves, who knows the word degen? So this is a very DeFi term. So we call ourselves at Kresko mission-oriented degens. Of course, we want to do degen things. We want to make money, but we also have a mission that we want to use the money we make to help people and bring them access to things. I'm also an angel investor, but I don't have as much time these days. I'm not doing as much. My background is I've been in security for over 12 plus years. So I've been an investigator, and also I advise like blockchain companies and blockchains protocols for security. I helped build the Cello's like security team. And I have like some people from Cello here. Thank you. Cool. And for fun, I like to travel, like to learn languages. And I'm also a yoga teacher. Once in a while, when I do have time, I teach yoga. And that is my Hindu Hacker is my Twitter. Feel free to follow. And go back one. And I'm also into NFTs, but very few. But I really like, so this is my profile picture. It's from Crypto Covens. Who knows about Crypto Covens here? All right, we have quite a few people. Yay! All right, cool. So internet, just everyone has internet access? If not, here, let's just. So if you guys want access to internet, you can use the. All right, let's keep going. Do command enter, just go full screen. All right, so a quick feedback. If you do the scan, I just have one question. About DeFi, if you can just quickly scan and give us like feedback, it'll help me do the talk a little better. Are people able to see the form? Give me a thumbs up. All right, we'll give 2 minutes and then start. Yeah, and also if you add your email here, we will send out a survey that if you finish it, then we are doing a, 2 months ago we did a founders NFT survey. So whoever gives us, fills the survey, you'll be part of the Kresko community, then that will help us build the product that we're building. And then that gives you, then you become part of the Kresko community, and then we'll give a Kresko NFT to show that you are part of the community. So this adding email here will help us know that you joined us, and also it'll help us do the talk and change the talk based on that. So how many finished? Finish? Okay. All right. I think if not, then we can share this slide in the end again, and we'll get started. All right, so what is DeFi? Can somebody, who can tell me, like just shout it out, like what is DeFi to you? All right, decentralized finance. No banks, yes. Sick yields, yay. All right, what else interests you in DeFi? Like why are you interested in DeFi? Sick yields, no banks. Freedom, yes. Peer-to-peer. Big APYs, yeah, there is my Dijon there, right there. No borderlines, yes. Finance without borders, yeah? Awesome. So basically what is DeFi? Of course, it is decentralized finance. It is a way to build the financial tools we have right now, but by removing all the third-party intermediaries. For example, like if you put money in your bank account, for savings, I don't know how much, what is the savings rate that banks give in Mexico? Less than 2%, right? So, but they are, when they lend out, like, who has taken a loan? Like, how much percent did you pay to the banks? 50? 50? No way.
Like 30% for a personal
Loan. Yeah. Wow. So they give you less than 2%, and they charge 30%. Where does that 28% go? It goes to have these like big buildings, to like, you know, and pay these people who are just selling you more things, and you're literally paying them to charge you more money, right? So what decentralized finance is doing is that taking all these intermediaries out of the picture and saying, okay, we'll create software that has rules that everyone knows, and then you can go and say, I can see the rules, and it won't change on me. They won't change it on you. The reason I even started this company is I got really mad. How many of you are aware of like last year in March, the whole like Robin Hood issue where SEC stopped people from trading. They started censoring people from trading, and you're like, oh, you can't do, what is it called? You can't collude on the internet, right? These kids were colluding on Reddit, and that is not okay, but hedge funds have been doing this for how many decades now? And that is okay. So that really made me mad, because what they did was they said, oh, this is not okay. The rules are here, and everyone was following the rules. And they said, we'll change the rules on you. So with DeFi, at least you know what the rules are, and you can decide whether you want to participate or not. And then randomly, nobody can change the rules on you, as long as the project is actually decentralized. A lot of projects claim they are decentralized, may not be. But if you use the right project, then it is decentralized. And the other thing is, by becoming part of a project, you become an owner in that project. And of course, there will be some fees that the protocol or the project charges, but the charge is not going to me, because once I release my software, it's open source, it's running on the blockchain, I have no control over it, and unless I put some code in there to send the money to me, it's going to everyone else, right? So that is what it means to be like decentralized without third parties. But again, like as I said, it's like a little different. The model works a little differently, and I'll explain how it works differently. Next slide. All right, so I'll give firstly like an overview of DeFi. What are the different things that you can do? The first thing is, when you are using blockchain, the blockchain does not know how much money you have in the real world. So what you do is you use on-ramps and off-ramps, right? For a way to, like, when you use exchanges, you move your money, either you wire money or you do some kind of transaction where you move your dollars or your pesos from your bank to an exchange. That is called on-ramp. When you use that money to buy crypto, that's called on-ramp. And on-ramp is the opposite, right? Like now you have crypto, you want like pesos to spend here, maybe you sell something, and then, so that is on-ramp and off-ramps. Decentralized exchanges. So this is a way for you to trade, right? Like in centralized exchanges, what you have is the bank is in between you and the seller, right? So you are the buyer, maybe somebody else is the seller. For example, what's your name? Sarah. So Sarah here wants to sell, like, I don't know, 10 Tesla stocks, and Marcus there wants to buy 10 Tesla stocks. You can't really sell it to him. You have to go to the bank and say, or a trading dashboard and say, I'm going to sell 10 Tesla stocks, and you have to wait till Marcus comes online and says, I'll buy the 10 Tesla stocks, and then only that trading can happen. So in a decentralized exchange, you don't need to wait for that. So you can just go anytime, 24/7, it's open. You go, I want to buy 10 I don't know, like 10 Tesla stocks, or maybe, I don't know, 10 near tokens or 10 seller tokens, and then you can just buy it. Like, you don't have to like wait for somebody to be online only between 10 and 4 p.m. And then I'll talk more about what pooling liquidity means. So lending and borrowing. So right, we were talking earlier about, hey, the banks are giving you 2%, but they're charging, somebody borrows, they're charging them 30%. So in this case, you have a lending and borrowing protocols who have heard of like Aave, Compound. Balancer is it doing lending and borrowing now? Okay, cool. So basically what these protocols do is, if you want to borrow money, you can lock your crypto. Let's say you have, what are people's like favorite crypto here? Like, just shout it out, like Bitcoin, Ethereum, near? Ethereum, okay. AVAX, all right, AVAX there. Phantom, okay, so let's say, let's say you have Ethereum, right? Then you can say, but you think that the price of Ethereum will go up. Let's say you have $100 of Ethereum. You can lock your Ethereum and say, I want to borrow against this. So the charge they do is like much less, right? How much is Compound charging you, like when you borrow against your Ethereum? Maybe like 6% or 5%, something like that, no? And then when you lend it, then you're also getting the similar percent. There'll be like a very small fee difference, but most of the fee is going directly to you. There's no like third party bank going there in between to take it. And a lot of people borrow it to buy things, but many people are doing the degen things, right? They want to like leverage. I think the price of Ethereum is going up. What they do is they borrow against Ethereum and then buy more Ethereum from it. So then you can do leverage, but in a more decentralized way. You have access, and custody to your tokens. And the cool thing is, you don't need to wait, right? Whenever you borrow, if you want to like say, oh, I lent my money, I want it back, you don't have to say, go to like some bank and say, oh, please give me my money back. No, like you can just go click a button and get your money back. It's not, it's like open, it's freedom. And then you have other derivatives, right? So I was talking about synthetics, right? Like that is like what I'm building. So if you want to create like synthetic assets like synthetic Tesla, synthetic Apple, those are also come under DeFi. And then of course stable coins, right? Like how do you represent US dollar or pesos that you have on a blockchain? So then you can use something called as like stable coin. So some of them are like backed by crypto to create like a stable coin. Some are algorithmic, some are like hold, some projects like who knows USDT. Yeah, so what they do is they actually hold dollars in the bank, but you don't actually know if they actually hold that dollar. So that is a stable coin. And of course, you can use it for payments, right? And wallets. So you have wallets, and then you can do like payments. We have a person from Cello here. They do the Velora app. They use like mobile app to do payments. So these are like different use cases or like an overview of DeFi. Did I miss anything? Anybody thinks there are other things that we can do in DeFi? Anything else?
Protecting yourself from the government.
Okay. Yeah. All right. So staking is part of like, it's like DEX and it's part of like everything. So it's like a concept, but it's not like by itself. There's no staking by itself. Yeah. All right. Let's go. All right. And then the DeFi space is evolving super rapidly. If you miss 2 weeks, there is like something new every day. The best place to get your information is using Twitter. That's what I use. I've been using it. I get a lot of alpha if you follow the right people who are not shilling. Who knows the word shilling? Okay, almost everyone. Shilling is, if you don't know, is somebody trying to sell you something. If somebody says, "Hey, this token is so good, like you should buy it. Please do it." You should not buy it. Don't do it, please. And yeah, and they're holding a bag of that token. They want it to go up. So it's a rapidly evolving field. There's a new concept called DeFi 2.0 that came like maybe 3-4 months ago. Did we lose power? Okay. So DeFi 2.0 is a concept that was invented like maybe 6 months ago, but it already feels like 10 years ago. It already feels old news. Who knows DeFi 2.0? Like, who knows what this is or have heard of it? All right, we'll not get into it. I don't want to complicate things. We'll keep it simple for today. If you want to talk about it, come talk to me afterwards. Or I'm also doing a talk on Monday evening. You can come do a meetup. I'm doing a meetup in Hab, and we'll share the link on our Telegram, and I'll share my Telegram link soon when this comes back up. Maybe we should turn the thing on again, because I think it went to standby. All right, while they turn it on, I'll also talk about some risks. Again, this is the... Okay, we'll wait. Yeah, it's just fine. Okay. All right, I'll keep talking. I'm good at just like blabbering on. All right, so there are also some risks, right, in DeFi. What are the risks, right? Like, even if somebody's like shilling you something and they're not telling you what the risks are, you should be very careful. So one of the biggest risks, what are some risks in DeFi? Rug pull, yes, it's a big thing. A rug pull is when the developers or like the people who are creating the projects are like not really have good intentions, and they just take all the money you give them and just run away. So that is a rug pull. What are some other soft? Yep. Oh, a soft rug pull. I don't know what that is.
It's well, the project goes down, like
Yeah.
Olympus or something.
Okay.
Like that,
Yeah.
and they are not studying any money, but the project is just
Okay. Yeah. So the soft rug pull, yeah. So the soft rug pull is, like sometimes people, the protocol itself is not designed properly. That could be a reason, but the market condition itself, right? Like the market itself might go down, and then other risks are, go ahead. All right, so impermanent loss as well, and we'll talk what that means in a bit. And then the other, okay. Bank run. Yeah, so some projects, like you need to have a lot of like liquidity or like a lot of like tokens to be locked in the protocol for it to work. And if people lose confidence in the protocol, people go do a bank run. They want the money out, right? Even like you see bank run here, right? In Argentina has happened so many times, right? If they lose faith in the government, they want to go get the money out from the bank, but the bank has loaned out the money. There's no money in the bank, so that is a bank run. And then some other ones are if the code itself, like, by mistake, the developers did a wrong code and somebody hacks into it. So these are like some risks that are in DeFi, and you should know, right? Then when you're like creating investment portfolio, just making sure that, hey, these are the risks you're taking. So sometimes when you use DeFi, the risk is a little higher than if you just had like a layer 1 token and then you just take that. So that is a little less risky because you're not doing too much moving the money around using these smart contracts. So that could be less risky. All right, let's keep going. Next slide, next. All right, so also I'll tell you, like, please, a lot of people ask advice and people say DYOR. How many people know what DYOR means? So there you go, yeah. Do your own research, but nobody tells you how to do your own research. So I'll try to answer like a little bit of how to do your own research. And then, of course, this is not investment advice. This is like purely, I do it as educational. I'm not even like trying to sell you my token. Don't buy my token, please. So this is not investment advice. And also, I'm building a community that is more focused on education. We want to have mission-oriented degens. So please, if you are here in the crowd and part of the community, to my community, please do not sell your tokens, your favorite tokens, your investment advice, your crypto bots, please, your NFT projects. Do not sell anything to my community. You want to go somewhere else and sell, please do it. But please, no shilling here. If you are shilling, mention all the risks I told you, and then you can shill. Yeah, keep going. Keep going. All right, so I'll talk a little bit about decentralized exchanges. How many people know how decentralized exchanges work? How many people know how like traditional exchange works? All right, so I briefly touched upon, right? Like, so let's say I'll talk about how traditional exchanges work, and then it'll be easy to understand how decentralized exchanges work. So in a centralized exchange, there is a centralized like authority or like a bank or somebody like a brokerage in between, or like NASDAQ or NYSE. These are exchanges. So what they're doing is they're literally like matching buyers and sellers, right? Like earlier, like Sarah was trying to buy from like sell to Marcus, right? So the way they do it is like somebody is buying, let's say Tesla is $1,000, and maybe Sarah wants to sell it for $1,001, right? And Marcus is on the other side and he wants to buy it at $999, right? Till two parties agree at the same price, there's no exchange happening, right? Same thing happens if you go to the market and they say, hey, I want to buy an apple for, I don't know, 10 pesos, and they're like, no, it's 20 pesos. And then till you come to an agreement of what that number is, maybe you buy it for like 18 pesos, the exchange does not happen. So the same thing's happening using a system. So, but in reality, what is happening is you're not actually buying. Like Marcus is not actually buying directly from Sarah. What is happening is there are something called as like market makers. How many people know what market makers are? So market makers are people who are providing liquidity. So if Sarah says, I want to sell 10 Tesla stocks for $1,001, so then a market maker comes and says, hey, I'll buy it to you from $1,000.99, right? So they're like, oh, Sarah doesn't have time. She's just like, I want to sell it right now. So she says, okay, 1 cent is what is 1 cent for me. She's going to sell it fast. But what they're doing is they're doing this kind of, they're also then selling to Marcus. Marcus is there. he wants to buy at $999, and they tell Marcus, oh, I'll sell you for like $999.01, right? So they're selling him for 1 cent more, and they're buying from her for 1 cent less, and then they're making that difference of money. It's very small amount, but when you add up like all the trades that are happening, if like there are like usually the volumes are like millions of dollars happening every hour, and they make a lot of money like that. So you have these market makers. Most of the market makers are like these like hedge funds, right? Those are the hedge funds that were involved in like Robinhood, right? That's why they were like getting all the data from you. When Robinhood says it's like free trade, it's not free because they're selling your data to them, and they're like kind of like cheating you, right, by giving you like more. So these are like market makers in the traditional world. So in a decentralized world, how does that work is, let's go to the next slide. All right, so in a decentralized world, we have something called as a pool. So let's say there are two assets, right? Like let's say there's ETH and USDC. So the way it works is you can still have these like big market makers come and provide liquidity, but you as individuals can also provide liquidity. And this is how a trade is allowed 24/7. So let's say D is here, he wants to provide liquidity. So what you do is you take 10 ETH and 10 USDC and put it in a pool, and Ro can come and put also $10 worth of ETH and USDC, and many more people can do this, and Fran also can do $100. And then let's say totally the pool gets collected $5 million worth of ETH and $5 million worth of USDC. And now once you have this pool, it is always on. Then what you can do is, let's say you want to do a trade. You have USDC and you want to buy ETH. What you do is, hey, I will provide $100 to the pool and take out $100 worth of ETH. So anybody can come and say, I'll put 100 USDC and take out ETH. And the same thing can happen the other way, right? You can also give $100 worth of ETH and take out USDC. So this is a good way for people to be trading. What it does is it removes friction, right? It allows individuals like you and me who don't have like millions of dollars to provide liquidity and become a market maker. Some caveats here is if this pool is small, right? Let's say there's only $100 here of ETH and $100 of USDC. If you take out $10 worth of USDC, you're moving the whole market. So the price of ETH will go up a lot price of ETH will go down a lot, and the price of USDC will go up a lot because you took out a lot of money, right? So this is what is called as like slippage. If you hear the term slippage, it just means that there is not enough in the pool. And usually if you see higher percent of slippage, you should be a little careful. And I'll show some demos here to make this a little more clear. So any questions here before I move on? Yeah, it's more concerning because then you're getting a price. Let's say ETH that was at $100 right now, and if the slippage is 2%, then you're paying somewhere about like $103 instead of $100 to buy it. Yeah, I mean, depends on how big your size is, right? So you can see, okay, like, am I willing to pay it's basically a commission, right? Am I willing to pay extra 2% or 3% to make this trade happen? Depends how big your order is. If you have $1 million, maybe you can take that. Or if you have just doing like $50 and it's charging you $10 to do it, then it's a lot, right? So it's up to you how much, what is your risk appetite. Usually, like less than like 0.5% is like decent. Like, yeah. Yeah, so it's a little like, I think, complicated. I don't want to get into technical details, but if you're signed up, right, I'll send you some resource that will go exactly into like that. All right, let's keep going. All right, so usually when you're creating, okay, so what we did before, let's backslide. So what we did here is when you added these $10 and $10, you created a liquidity pool. So then you became a market maker. And then when you went to trade, right, then you're a trader. So you don't have to be a market maker to trade, or you don't have to be a trader to do market making. So there are two separate things. All right, let's go. All right, so we'll share the slide. There's some links here of how these things work. So usually when you create a liquidity pool, most of the AMMs when you're doing market making, they give you a fee of 0.3%. So there is always a fee that gets charged when you're doing a trade. If you're buying $100 worth of ETH, the exchange charges you 0.3%. Usually that's how much it charges, and usually all the charge you make is not going to the developer who created it, like with the banks, but here the charge is going to anybody who created the pool. Like when you're like market making, that's when you get it. Next slide. And then farming. So somebody was asking like about farming here. So there could also be, if you create a pool, so sometimes you can lock the pool tokens that you created, and then you can get like these like farming rewards. So basically farming rewards are just an incentive mechanism by protocols to make you use their protocol and also build liquidity, right? Let's say you had like $1,000 worth of like pool that you created. So what you do is you take that $1,000 and then lock it in the protocol. That way, once it's locked, so it's hard, then it's easy for other people, right? If earlier we saw there was like $10 million, right? Like $5 million of ETH and USDC. And if it's locked, it's better for the protocol, right? Then it gives a good user experience for other people. If it's not locked, then you can withdraw at any time, and then it decreases, and there's more slippage for people who are trading. So that's why they give you farming rewards to lock it. So your incentive is, okay, I'm getting farming rewards, you're like, keep it staked, and then you get rewards, right? So that's where the APY comes for, APR and APYs come from. And I'll show a demo of all those things. So, okay, I'll before I go into demo, any questions? So we are about at halfway mark right now, and I'll try to show a demo for the rest half. Any questions? Okay, all right, let's go. I don't know how to.
You want to do the demo?
Yeah. Cheers for Rohel for helping us out. So Rohel is our like marketing manager at Kresko, and you'll hear from him on our like Telegram groups and in the community. So feel free to ask questions. So I'll just give a demo of exactly like what I spoke about, and then we can do, if there is time, we can do a few like questions and discussions, and I can show some advanced things as well. So one thing I use is a ledger wallet. So who knows what a ledger is? Okay, so this is a hardware device where all the keys are stored here. So if somebody steals my computer, they don't get my keys. Even if they steal this, they don't get anything because only I know the password. And don't worry, this is a test account. Don't try to steal it. So I'm just gonna log in. Rohel, can you get me a water? All right, so I've logged into my ledger on my computer, and then this is a DEX called Trisolaris. How many of you have heard of Trisolaris? So the most popular DEX in crypto that made this kind of DEX popular is Uniswap. So a lot of projects have like just like forked Uniswap, just use the code and put it on other blockchains. So Trisolaris is a fork of, I think it's more a fork of SushiSwap if I'm correct. And then this is running on the Aurora blockchain. How many of you have heard of Aurora? How many of you have heard of Near? All right, so this is a on Near. So Aurora is a EVM chain on Near. So this is running on the Near blockchain. And this is an AMM. So I'll just first show you how trading works, and then we can go into pools. So if you see here, I have about 4.4 Aurora tokens and 1.8 Near tokens. And let's say that I wanted to sell like maybe one Aurora token. And then I see here, is it clear? I don't know how clear this is. Can you guys see it? Yeah. All right. So here if you see, it's showing you the price. If one Aurora token will get me 0.73 near tokens, and you see the price per Aurora. And then below here, it's not too clear. So it says minimum received is like 0.72 and the price impact. So that is your slippage. So right now the slippage is, because it's such a small amount, it is just like so small, like it's like less than 0.01%. Now let's see, like if I keep increasing this, right? I did like 1 million or something. And then the price impact is 97.85%. So literally I'll just get like 3% out of this, right? So if I just reduce it a little bit, let's say I did 1,000, it's still 0.65%. Maybe I take it. If I do like 10,000, then 5%. So this is something maybe I won't accept. And a good way to find out the liquidity in different dexes to find your token is this app called Dex Screener. Let me. The Dex Screener. What token do you want to trade? Let's just try to find out. Any token that you want to trade? Well, let's find the liquidity and where to buy it. Just shout out some ERC20 token or anything. Decentraland. All right. All right. So the token is called Mana, and then we have so much, right? So let's say. So I can just literally like scroll down and see. So the first one has liquidity of 89K, 6.8K, too small. I can keep going down. I want it in millions. Like I want liquidity to be at least a couple of millions. So if you see here, Uniswap has 2.7 million. SushiSwap has 8.6 million. So I would say I would go here, right? Like I would go to like here and say, okay, so Mana and DAI. So you can like buy it for DAI, and it shows you the liquidity here. It's like the pool I showed you earlier, right? So the pool that had like, in my case, 10 million. So here it has like 8.6 million. So this is an important thing to note. Yeah, that is a good thing to know. Cool. And we can see like our token, right? We're trying to do Aurora and Near. Let's see how much liquidity is in that one. Yeah, go for it. Aurora. So Aurora is on the Ethereum blockchain. So it is, sorry, on the Near blockchain. So it is basically a EVM chain. So EVM means Ethereum virtual machines. So any programs like Uniswap that runs on Ethereum can run on any other EVM chains. So some EVM chains that you can think of are like Phantom has a EVM chain. We have Avalanche people here. Like, so Avalanche has a C chain that does EVM. So similarly, Near has a EVM chain called Aurora. So that is Aurora. Yeah. And if you see here, this is an Aurora swap. It's not Trisolaris. For some reason, Trisolaris is not showing up. But if you see here, the liquidity is only like $73,000, which is not high, so you'll get a lot of slippage. If I go now to OneSwap and try to do the same exchange, it'll be like too much slippage. All right, let's do the exchange now. I'm just gonna do one Aurora. So I'm using the MetaMask wallet here. I think Chewy showed a demo of that earlier. So I accept the transaction on my ledger, and then it's just waiting. It'll take a few seconds. And what you can also do is, the cool thing about here is with banks, no, you can't really say if I send somebody $100, no, you can't go and check, hey, did I have $100 and did like Marcus there actually get the $100? You can't see. But on a blockchain, this can be a little technical, but if you do want to see, you can literally go to the blockchain and see, hey, this is my address. I sent one Aurora token, and then I received from this is the address for the exchange, and then I received back 0.73 Aurora tokens. So this is a technical way of finding, hey, like when I do a transaction, did it actually happen? You can go and see on the blockchain by using an explorer. So it's called a blockchain explorer. So this is this is by Etherscan. So this is a very popular block explorer based on Ethereum. So it can work on any EVM chains. So next what we will do is we'll create a pool. So a good way before you create a pool is, hey, like if you want to do like some farming, you can check the different like farms that are there. So if I can go to the farm section here, now I see here that there are a few farms here, right? And they show you the different kind of farms and the kind of like APRs that are available. So if you see here, the Tri-Solaris and Aurora has like, they're called like dual reward pools. So you can get 102% APR in Tri-Solaris token and 11% in Aurora tokens. Again, there is a caveat here that not many people mention, is that let's say you put $100. Of course, at today's price, you're getting 102% if you did it for a year, okay? So if you put $100 now, and if the price didn't change at all, you'll get $102 at the end of the next year. But of course, the market is not stable. The price changes all the time. So even though you may get 102% in terms of the tokens, but you may not actually get 102% in terms of the dollar value. That is another thing to note when you're trying to do a risk profile is, hey, maybe you put some of your money in stable coins, some portion of your money in like a layer 1 token, like Near or Celo or Ethereum. So you have to like hedge your risks, even though you have so much high APR. And somebody was mentioning about like Olympus DAO, right? It crashed like 90%. So then even though you had like, I think Olympus had like 100,000% APR, and it crashed like 90%. So your APR is like means shit if you actually don't get if the price changes on you. All right. With that being said, so let's try to create a pool. Like let's see what we can just do a try Near, right? We have those two tokens, but I can't. So I'll go to the pool here, and literally I'm creating the pool that I mentioned here, right? Like before we showed this diagram here. So I'll put like maybe, let's see if I can I have $10. So I'll try to add liquidity. So I'll go to Aurora. I have 3.4 Aurora, and I'll find the price. I'll use like maybe CoinMarketCap to find the price of Aurora. So CoinMarketCap is a good way to find token prices. There are others like CoinGecko and Nomics. This is the oldest one. Pretty cool to use. Too many advertisements, which I don't like. All right, so the price of Aurora is $7.88. So I'm going to do roughly like 1.3 Aurora, that is like about $10. And then I'll add a Near token with it. All right, so what I'm now doing is I'm adding 1.3 Aurora and 0.9 Near. So that is basically $10 worth of Aurora and $10 worth of Near. And I can say supply. And you see here the share of the pool. So I will have like 17.58% the share of the pool. What that tells me is that there's very, very low liquidity on this pool. Yeah. Because usually you want, if it's a bigger pool, your percentage will be 0.01% or less than that. But we'll do it. It's just like $10. I'm just going to do it for trial here. Supply. Usually I wouldn't do it. Like if I'm doing it for real, I would not go to a pool that has less money. And this is another way, right? When you're trying to put money in a protocol, a good way to find out is like find out how much liquidity is there. that way, you know, like somebody, like if there is like $100 million or 200 million or $500 million or $1 billion liquidity, that means that there's so much money. Somebody has done a lot of research in the code. They've seen those things to make sure that it is running fine. So that's a good way to find out. And I'll show a little more like tools of how to do some research as well, like DAOverse, right? I'll finish this, and if I have time, I can also show you how to do some research as well. So I'll just add the supply for now. All right, and then I'll close it. So again, I can go to the Explorer and view it if I wanted, but I'll just skip it for the interest of time. Now I've created my pool. Now I can go into the farming section, and if I see here, there's a pool called try and W near. I'll say I'll deposit, and I'll say add. So I have 19.15 like pool tokens that I just created. Oh, this is liquidity. Hold on. What pool did I create? All right, there you go. Oh, no.
Aurora, here, no?
Oh, okay. Sorry. Wrong. I'm going to the wrong pool. Let's. Oh, so because I created the wrong pool, so there is literally no farming rewards for that pool. Sorry. All right.
Still gaining the fees.
I'm still gaining the 0.3% fees if somebody does the swap. Okay, so basically it's pretty simple. What you do is you'll say deposit, and then you'll just add it. It's pretty straightforward. And then once you add it, I'll show you how to claim your rewards, right? So I already have one pool that is gathering rewards here. So I have this Tri Solaris Aurora pool that I have here. And if you see here, there is totally like $2.8 million. And then I have, how much do I have here? If I say claim. Here, okay, so here you see here, I have like $16,000 worth of liquidity that I've provided. And I have like unclaimed 601 Tri Solaris and 3.7 Aurora. So I'm just going to claim it. And I've accepted it on my ledger, and it will just take a few seconds. All right, there you go. Again, I can go to the Explorer and see that I got it. It'll take a few seconds to index here. And then it's done. There you go. So then I received that. And I can also go back to my address and see what happened. So if you see here ERC20 transactions, I can see I got this 601 Tri Solaris tokens and 3.76 Aurora tokens. All right, so I'll quickly now I have, I think, about 13 minutes or so. I'll show you a basic like research of how I would look at some projects. Before I go there, anybody has like some pressing questions so far or want to learn about something? Yes, Sarah? Yes. Yeah, so that is the farming I was talking about. So that is the farming reward. So the fees I got from swaps, it already increased. Maybe I'd added 15,000 before, and I got 16,000 because of that 0.3% trading fee that I got. But this is separate. The farming rewards are separate from that. All right. So who has heard of DeFi Llama here? Okay, so this is a good tool to find out how much liquidity. So there's a term called TVL. So TVL means total value locked. So this is a good way to find out if some protocol is like safe to use. A lot of people say, oh, come use my protocol. I can give you like 10,000% APR, but you have to see how much TVL is there. Otherwise, it's not safe. Like it may not be safe. So this is a good dashboard, right? So here, if I see, so this shows the entire TVL of the whole DeFi space, including all the different chains. So you see here, it's almost close to $200 billion. So people have actually taken their money and they trust DeFi so much that they've locked $200 billion. But of course, it's not locked in one project, right? It's locked over like multiple chains and multiple projects. And here, if you see, the highest is like Curve. So Curve is another like decentralized exchange. But it allows you to trade the same value pairs. For example, if you want to trade USDT and DAI, which are both stable coins, so it allows you to trade. So this is a project called Curve. MakerDAO is the next highest one, and then it goes down here. So let's say you wanted to like compare, hey, like I want to use this new EVM chain, let's say Aurora, right? Like, so I want to make sure that that project has enough liquidity. So on Aurora, right, we saw there are all close to $200 billion that is locked in DeFi. Out of that, about $500 million is locked in Aurora. Yeah. So and you can see here how the liquidity changed over time. So at the peak, it was 782 million. And then I can go down here and also see within Aurora, what are the projects, right? A good way, like if you are like, somebody tells you, hey, there's a new chain called Moonbeam tomorrow. And they say, hey, you should go and like look at it. So a good way to start is going to DeFi Llama, going to Moonbeam and saying, what are the top projects? So for Aurora, we went to the top projects. And we see that the top project here is Trisolaris. So usually the top project will always be a DEX because a lot of people want to use it to trade. So here it is Trisolaris, and you see Trisolaris has $280 million locked. Then I'm like, okay, people trust it so much to lock about $280 million. So maybe I'm going to use that. So you can also, this is also a good way to securely go to the right website. So some people may create like fake websites, and if you Google it, you may go to the wrong one. So a good way to is go to DeFi Llama, search the website name, and then if I click here, then it gives me the link to the website and Twitter, and that's a good way to go. And then of course, like there are other projects. So usually top projects will be AMM, and then you'll have like different kinds of AMMs. Then you'll have lending and borrowing protocols. This is a good way to do your research. And then we saw DEX screener. So then if you want to see liquidity within each protocol DEX, you can just go to that DEX screener. Who wants to see, like anybody has a question around another like blockchain that they want to see? You're curious about? Luna? Okay, let's see Luna, like just as an example, right? So Luna is Terra. The blockchain is called Terra. So you see Terra, like now Terra has like $23 billion locked. Then I'm like, okay, Aurora had like what, 500 million. Terra has like 23 billion. I'm like, okay, it gives me some trust. And then I can see here the top few projects. In this case, Anchor is not a DEX. So Anchor is a different like yield protocol that gives you close to like 20% APRs. So it's a good project personally for me. Like I'm not shilling, so personally I use it. And then if you go down the list, there is Lido. So Lido is a different project that does liquid staking. And then if you go down, Astroport. So this is a DEX. So this is the top DEX on the Terra blockchain, and it has about $1.3 billion locked. So if you wanted to use the Terra blockchain, then I would go to Astroport and do my trading there. Or if you want to create pools, or if you want to do farming, I would go to that DEX, because at least I can trust it because so many people are trusting it. So it's a good, again, I call it safe in quotes, because even with that, nobody can give you guarantees. All right, cool. Then any other question? I think we have a few minutes, so I want to open it up for regular questions and like closing comments. Anything else? Okay, so these are not pools. So these are the different projects that are built on the Terra blockchain. So the first project is called Anchor. So Anchor protocol is like a savings account. So you can say, I want to lock $1,000, and it gives you 20% APR, which is pretty good. And it's a good project, but I would not trust it fully. If you wanted to do savings, like maybe put half your money or less than half, and put it in somewhere else as well. That way you're like de-risking yourself from, if that gets hacked, all your money will get lost, right? So that is a savings protocol. And the next one is called Lido. So Lido is like a staking protocol. So I would say it's a little advanced. So I'm gonna skip that for now. Again, I randomly picked, again, like don't trust, like use this as your investment strategy because I randomly picked, somebody gave me a name, I picked that. But this is how you do your research, right? Like if you, so you can go to like some popular projects and like search through this. All right, so let's go back to our slides here. And then, yeah, so if you have already done the survey, I have an email. I can send you the slides, and it has like links to all the resources that we talked about. And then this is the first time that we are publicly releasing our Telegram. So if you want to join our public Telegram, please join. And we're not like making it public just yet, but this is only for the DAOist community. And we will... Woohoo! Yay! Are people able to get to it? So we'll also share the meetup links here that we are doing. So I'm doing, did everyone get? Should I wait longer? All right. So what we're doing is we're doing event on Monday. So I've been in the space for a long time. So I want to give a talk about my journey and how the blockchain itself has evolved over the last almost what, like 9, 10 years, maybe 11 years. And then also how to think about your own mindset. So I think the best way to make money in crypto is not finding the next token, but accepting your own psychology and working with that and not getting emotional. So that is the best way to become rich or wealthy in crypto. So I will talk about some strategies around that. And we'll post the link in our Telegram. People in the back, can you keep it down, please? Hola, people in the back, can you keep it down? We're just closing up. Thank you. All right, so again, like if you came late, so this is my feedback page to enter your email. Please add your email so that we can send you a link to join the Kresko communities like NFT that we want to do. And yeah, so this is our Twitter handle, KreskoFi, and I'm at Hindu Hacker. If you have any questions, feel free to DM me on Twitter. I answer everybody's message. Don't shill me anything. That'll immediately get you blocked. But otherwise, I answer questions. Feel free to reach out. I'm always on Twitter. Happy to answer any questions. But let's see how much time I have. I have like about 3 minutes. So if you guys have like more like pressing questions, concerns, I can answer, and I can also meet you outside there, far away from this place, to answer questions so that we don't disturb the next people. Go ahead, David. Yeah, so my theory on DAOs is that in the early days, you need a leader to build it out. So we are not going to do DAO in the early days. It'll get chaotic. So over time, we will create a DAO. Right now, I'm saying 1 year, but I don't know. I can't predict. It's a startup. Things change. But we will, over time, make a DAO. Yeah.
I don't know Kresko, but how is different than Mirror Protocol, for example?
Yep. So Kresko means growth. So we want to enable people to grow their wealth. So it's different from Mirror. So Mirror also does something similar, but technically we are more capital efficient. So it's a different kind of using the money, right? And also like our goal is to like, make it more accessible. It's if you want, like if you go to Mirror, it's not really easy to use. You can't use it as easily on a mobile phone. So those are a few differences, and the biggest difference, according to me at least, this is more a social thing and token economic thing, is that the Mirror team does not have any Mirror tokens. So they have no skin in the game. Some people, like some projects are not good because they take too much tokens, right? If you have 100% of your tokens, and if you keep 60% of it for yourself and your investors, it's not good. It's a bad project, right? You're not giving ownership to the people. but it's not good to have zero either, because then what is your incentive to keep building it, right? How do you trust that this team will continue working on it? Right now, it is fine, right? Right now, Terra is a very hot project, and some of the Terra team built the Mirror protocol. But in the long run, right, like let's say the price of Touchwood doesn't happen, but price of Terra, like Luna goes down a lot, and then they don't have enough resources, then who's going to be taking care of Mirror? Like, will it exist in 10 years? I don't know, because the team does not have tokens. So I would say, like, from a token engineering perspective, you want to find out a project that has less than, anywhere above, like, at least it has to have 10%, and less than, like, maybe like 35%. That being said, like, my project maybe will have like 37% will be for the team and some of the early investors, and then we'll give the rest. So I think 25 to 35 is a good number for teams to have.
In fact, I know that Mirror doesn't allocate to the team tokens because of the legal problems.
Yes.
They are being prosecuted by the SEC.
Yep.
You won't be prosecuted, or you don't have those problems?
We will have that. That's why we are releasing our product without a token in the beginning. And we are also creating a protocol that may not even need a token. It can run by itself. And if we can incentivize people to use the protocol even without a token, much better, right? Like, then we are giving a service to people and there is no token. So nobody owns it. Then it's like, who are the SEC going to come and prosecute? Like, I released the software, somebody else created the website. I don't know, like, and then it's really decentralized. No, then it's freedom. Like, I'm like, okay, yeah, cool. Maybe one last question before we wrap up. Right on time. Go for it.
How do you incentivize people to join the protocol without a token? There's some things that actually have more tokens.
Yeah.
I think that there's that financial upside that
Yes.
that keeps people.
Yeah. So we are thinking a few things, like also we're innovating in the space. So one way you could do is you could do some gamification, and you can give like status to people for being contributing to the protocol. That could be one way. There could be fees, right? Like we talked about fees earlier. So people can earn some kind of like fee directly without a token. Like AMM, you had the 0.3% fee. You can have the fee. You can do some kind of like NFTs. So NFT is art. As long as you clearly say this is an art piece, and owning the art is just to be proud that you are part of this ecosystem. That's the only thing that is doing. So that is also a good way to like evangelize your community, right? So yeah, those are a few ways I can think of. All right, thanks everyone for coming. Really appreciate it. And thanks to Chewy and the DAOist team for hosting us. Really appreciate that. And thanks for the Kresko community, Roel for helping out. We have Dasha who's helping out, and Marcus here from the community, and everyone else who came to support us. Thank you.